Vijay Mehta of Surat is 55 years old and runs a small business. Like any Gujarati, stock market is not new for him. But Vijay has a conservative approach and only trusts big companies. The return may be less, but so is the risk. In 2010, he invested in Reliance Industries. He believed that Mukesh Ambani will carry the legacy of Dhirubhai Ambani and will take it to new heights along with his shares. He expected good return and dividend, but in 2020, 10 years had passed. A lot of water had flown in Sabarmati, but it seemed that Reliance was stuck in some pothole. In the same period, his friends had good earnings by investing in other stocks. Vijay was sad and he once even thought of selling it, but then decided to give it some more time. Finally, Vijay's fortune changed. In 2021, Reliance shares started rising. Now Vijay is finally reaping some benefits. On April 22, 2022, Reliance shares touched a new high of 2,802 rupees. Vijay and various other investors are wondering about one thing. What exactly happened to RIL shares which gave it this boost? People are also wondering about how much steam is still left in the company. Will they continue the rise or is the party over? So let us look at what exactly happened which put Reliance shares in the upward trajectory. Reliance has become the value king. On April 22, it touched a record high of 2,802 rupees. With a market cap of more than 18 lakh crore rupees, it has become the most valuable company in the country. There are some factors behind this rise. The first factor is new energy. Reliance is quickly putting its foothold in sectors like solar, battery and hydrogen. The value of this green energy business of Reliance is $30 billion. Investors are quite bullish regarding this. Another trigger is the hope of IPO of Reliance Jio and retail business. Investors expect to earn a hefty return from IPOs of these companies. Currently, the business valuation of each of these companies is close to $100 billion. This is more than the core business of the company, petrochemical, which is around $93 billion. However, even the oil business of the company is going quite well. Production from KG Basin. After the production began from KG Basin, analysts have increased the estimate of value. Petroleum is giving good boost because a jump is expected in gross refining margins. At the same time, in the fourth quarter of FY22, Brent has gone up by $30. Moreover, huge inventory gain is also expected. Petrol and diesel margins have reached a multi-year high. Increases in chemical prices are also giving support. Demand for chemical, petrol and diesel have reached pre-COVID levels. Jio business is also improving. Tariff hikes have helped telecom companies and made the telecom business stronger. ARPU of Jio has also improved. There is growth in broadband consumers. Competitors like Airtel have indicated 2 to 3 hikes this year. Now let us have a look at the market share in the telecom market. Even in this regard, Jio is way ahead of its competitors. Now let us look at the retail business. There has been improvement in the retail business of Reliance. An increase in market share gave confidence to the analysts. In the third quarter, almost all the stores reopened and improvement in the business operations of the company is visible. Expansion of stores and acquisition of new brands has given pace and growth to the retail business. There are indications of growth even in the e-commerce business. Now it's time to talk about the new energy business. Reliance is giving a lot of focus on it. The shares of renewable energy is expected to increase from 23% in 2021 to 40% in 2030. Hydrogen, solar panel and batteries will have a big contribution in this. The company is aggressive on acquisitions. From August 2021 till now, the company has acquired a stake in 7 companies. But unlike the last decade, interest cost is not expected to increase. Brokers expect free cash flow to increase from new energy business. So till now, we have discussed why the company's share price has increased. Now let us look at the hurdles in the growth of the company. Due to the fall in crude oil prices, there can be pressure on GRM, chemicals and oil gas business. Also, intense competition in the telecom sector will lead to higher capacity expenditure. Along with it, Reliance needs a huge investment in the retail and new energy business. Looking at the growth opportunity and the company's planning, most of the brokers are quite bullish on its shares. Money9 suggests Reliance shares are close to their record high and there will be buy on dip opportunities. After consulting with a financial advisor, you can gradually invest from a long-term perspective.